Now I would like to talk to you about what is an estate. Well, an estate is everything that you own on the date of your death. The fair market value of that asset, stocks, whatever it's worth on the date of your death or 6 months after. There's some very specific rules. It gets a little bit complicated, but basically is to determine the value, the fair market value of all of your assets so they become taxable. And the IRS, your lawyers, your accountants, your appraiser will all haggle with each other about how much the damn thing is worth so that the government gets a bigger chunk. Naturally, they say it's huge, and you say, hey, it's not that much. The estate tax, very major item. It's the only voluntary tax within the IRS code. Without proper planning, fire sales at the most inopportune time. You have heard horror stories where people have had to sell their farms in order to pay the IRS their dues. All of this can be avoided with an UltraTrust. You have no assets on the date of your death. You have repositioned your assets from yourself in your name to an UltraTrust. Again, if you have trouble with ownership, you have ownership issues, you must own things, you must own the land, you must own the building, you must own the car, you must own, if you have these kinds of issues, you can't separate yourself from the asset, the UltraTrust is not for you. And hey, somebody's got to pay the taxes, somebody's got to support all these lawyers, accountants, appraisers, and so forth within the legal system. And again, if you own more assets in each of different states, each state is the whole process. The UltraTrust, you can avoid all of these complications.